Alex hits submit on an apartment application, then gets rejected for having a credit score that's too low. But what does that even mean? Nobody actually explains what a credit score is or how you control it. Time to figure this out. Alex Googles, "What is a credit score?" and immediately drowns in financial jargon that makes zero sense. Every site uses different terms and gives conflicting advice. This is why nobody understands credit scores. Alex asks the landlord what credit score is needed, but gets a shrug, and everyone needs good credit these days. No specifics, no explanation, just gatekeeping with zero education. Alex needs to check their actual score. Alex finally checks their credit score through the banking app. It's 580. That's the actual number controlling everything. This single number determines whether you get apartments, cars, even jobs. Time to understand what actually affects it. The banker explains a credit score is just a number representing your credit risk, and there are 5 main factors: payment history, credit utilization, length of credit history, new credit, and credit mix. Let's see what Alex's report shows. Alex opens the mailbox to find bills and a credit report showing payment history, account ages, and recent inquiries. This report connects directly to that 580 score. Let's break down what each section actually means. The banker points out late payments marked in red. Payment history makes up 35% of your credit score. On-time payments are the biggest factor. One late payment can tank your score for months. Dude, you owe 800 on a 1,000 limit. That's 80% utilization, and it absolutely tanks your score. Keep it under 30%. Pay down that balance, or watch your credit score actually plummet. See this account opened 8 years ago? That's helping your score just by existing this long, bro. Longer credit history actually makes lenders trust you. Don't close those old accounts, Alex. Credit card, student loan, car loan, different types actually show you can manage various debts, Alex. Variety helps your score, bro. But don't go applying for everything at once now. Each application creates a hard inquiry, Alex. 3 apps means 3 dings on your credit report, actually. Hard inquiries drop your score 5 to 10 points each. Slow your roll, bro. Whoa, whoa, whoa! Closing that old account actually hurts your credit age, Alex. Your utilization ratio tanks too. This is a big mistake, bro. 95% utilization? That absolutely destroys your score, Alex. Maxing out cards demonstrates poor credit management. Pay this down immediately, bro. Forgot to pay that phone bill? Even one 30-day late payment actually tanks your score, Alex. Payment history is 35% of your score. This is how good credit disappears, bro. Alex sets up auto-pay on his credit card app, building good habits that actually protect his credit score. Keeping balances low and paying on time builds credit habits that actually work long-term. The banker reviews all 5 factors that actually affect your credit score on the whiteboard. Alex confirms complete understanding of the credit system and how each factor actually works. The banker shows Alex a timeline proving payment history is actually the most critical factor. Consistent on-time payments actually make up the biggest portion of your credit score. Alex receives a missed credit card payment notice and sees his score actually drop immediately. That single late payment actually causes a significant credit score consequence that hurts future applications. The banker draws a simple gauge showing how credit utilization actually works as the second biggest factor. Keeping utilization under 30% actually protects your score from unnecessary damage. Alex sees his utilization spike to 75% after a big purchase, actually causing his score to dip. High balances actually hurt your credit score even when you pay on time every month. The banker points to a chart showing how older accounts actually contribute positively to credit scores. Keeping old accounts open actually helps your credit history length, even with minimal usage. Alex applies for a gym membership card. A hard inquiry flashes on the screen, nudging his score down a bit. That small dip is the price of a hard inquiry. Now he wonders if different credit types could help. Banker shows a chart of revolving, installment, and mortgage credit. A balanced mix gives a modest boost to the score. Now Alex sees how variety actually helps. All factors are known, setting up a comprehensive recap. Alex reviews a dashboard that aggregates all 5 factors. Each decision moves the needle, and the score updates instantly. With the complete view, Alex is ready for future advanced strategies. The pieces fit together, and the path is clear. Banker explains the biggest score killer. Missing a 30-day payment. One missed payment drops the score by over 100 points. That missed payment stays on the report for 7 years. Alex now knows the worst mistake that can undo all progress. Alex sees 5 pre-approval offers. Each one triggers a hard inquiry that temporarily drops the score. Applying for too many cards at once hurts the score. He learns to avoid the temptation of easy credit offers. Alex considers closing an old card. The counterintuitive truth: it cuts available credit and shortens history. Closing unused cards can actually lower the score. He now knows the hidden downside of that habit. Landlord explains that many landlords now report rent to credit bureaus. Rent can build credit if reported. Now, Alex knows rent can actually help his score. This underutilized strategy opens a new path to credit. Alex spots a late payment error on his credit report. 1 in 5 reports has mistakes. Quick fixes can boost his score fast. He hits dispute and sends the claim. Fixing errors is a cheap, powerful way to protect his credit. He turns on autopay for his bill. Automatic minimum payments lock in on-time payments, the biggest score killer. Now he can focus on other things. Autopay is the insurance his credit needs. He asks a parent to add him as an authorized user. That adds decades of clean history instantly. No new debt, no responsibility, just a boost to his credit score. He signs the lease, feeling the weight lift. Credit control feels real. 5 factors, 3 mistakes. Now he knows how to master his score. Credit is learnable. He spots hard inquiries from recent loan apps. Each one can nudge his score down a bit. Now he knows to space out applications. Inquiries matter, but he can control them. The banker shows him the 30% rule. Use less than a third of your limit to keep the score high. Now he knows how much to spend. Low utilization equals higher credit. He sets up autopay for his phone. On-time payments are the biggest factor in his score. With autopay, he locks in habit. Payment history is the engine that drives his credit. Your rent could actually boost your credit if the landlord reports it to the bureaus, turning a regular expense into a credit-building tool. So, when that line gets reported, your score gets a little lift, because the system sees consistent rent payments as positive credit activity. Longer credit history counts as a factor, so that 5-year-old student loan actually adds weight to your score. Keeping old accounts open preserves that age contribution, meaning the older the line, the better for your overall credit picture. A balanced mix of revolving credit cards and installment loans actually benefits your score because the model rewards diversity. So adding a small personal loan or keeping a credit card active can improve that mix without taking on unnecessary debt. When you spot an error, filing a dispute actually removes the blemish and prevents hidden score damage. A clean report means the scoring engine sees only accurate data, keeping your credit health intact. Here's a 30-day sprint. Automate payments, report rent, keep old accounts, diversify mix, and dispute any errors. Follow that roadmap, and you'll see your score climb without needing any magic tricks. Credit utilization above 30% actually drags your score down, so that 78% reading is a red flag. Paying down balances below the 30% threshold instantly improves the score factor, giving you a quick boost. Setting up autopay protects your payment history factor, which actually makes up 35% of your overall score. With payments guaranteed, you remove the biggest risk of a score dip and stay on the growth path. Alex signs up for free credit monitoring alerts to catch issues early. Now he gets pings whenever his credit report changes. Banker explains hard inquiries ding your score when you apply for new credit. Each application creates a hard pull that drops your score temporarily. Banker warns opening too many accounts at once lowers your average credit age. Space out applications instead of flooding the market. Alex checks his report after 2 weeks and sees utilization dropping. On-time payments and lower balances are already reflecting positively. An unexpected medical bill tests Alex, but he uses emergency cash instead of credit. Avoiding credit cards protects his score from crisis damage. Alex gathers all documents for his final 30-day score assessment. He reviews his tracker to measure exactly how far he has come. Alex checks his updated score and sees a significant jump to 720. The improvement validates all his new credit management habits.